Uh-oh. Are the Bears trapped? Because we have another record day, another record high, and another record close. But everything could change on July 17th. So stay tuned, and we're going to go through that today. Greed is now here at 64, and things are starting to get spicy. I think this is a bear trap because the Bears thought that when big tech would sell off, like NVIDIA, that the market would go with it. But we're actually seeing a lot of green out there, which is translating to the Russell having an incredible day, up by 3.4%. In the last 5 days, we're up by 11%. It's a rocket ship. The Dow Jones is up by 1.8% today to another record close. And in the last 5 days, we're rocketing higher, nearly 4.5%. Wow. I really think the Bears are trapped here, but like I said, everything could change on July 17th. So if we look back to the notes from last weekend, it tells us that money market funds are now at $6 trillion. That's a really big number. It's a record high, right? They reach another record. And Goldman Sachs sees a wall of money in early July, fueling the summer party for stocks. And that's exactly what's been happening. A $400 billion buying frenzy into NVIDIA and crypto. Wow. And here's the stat we're talking about. Going back to 1928, the first 15 trading days of July have been the best 2-week trading period for the entire year. And they tend to fade after July 17th. What day is it today? It's July 16th. So is the market going to start fading tomorrow? Well, this is where we want to be mindful of the fact that we're up by more than 10% at the middle point of the year. And on average, at the end of the year, it's an additional 7.7%. For a median, we're looking at 9.8. And we went through these numbers last weekend, so I'm not gonna beat that dead horse. But what happens when we also have more than 20 record closes going into the first half of the year? Well, for the rest of the year, it's 5.7 or 9.6, which means an 80% hit ratio. And over here, 82.6% hit ratio. So maybe it is 1995, and maybe we don't do what we did on July 17th on average for the last 100 years. So far, earnings are turning out just fine. XLF also even has a new all-time high. I think things might change tomorrow when we get ASML. And then notably, as we look into the second half of the week, we got Netflix. We did talk about this before, and I'll get to that in a moment. But first, we want to also be mindful that there's not really that much economic data right now, but Jerome Powell did speak, and I'm going to show you a clip of him in a second. For the rest of the week, we have European CPI. In Canada, actually came down a little bit soft, and we're going to find out whether the ECB is going to pause or cut on Thursday. All right, now let's listen to a clip here from Jerome Powell.
We didn't think it would be appropriate to begin to loosen policy until we had greater confidence that inflation was moving sustainably down to 2%. We've been waiting on that, and I would say we didn't gain any additional confidence in the first quarter, but the 3 readings in the second quarter, including the one from last week, do add somewhat to confidence. We've also said that we're a dual mandate bank. For a long time, since inflation arrived, it's been appropriate to focus mainly on inflation. But now that inflation has come down and the labor market has indeed cooled off, we're going to be looking at both mandates. They're in much better balance, and that means that if we were to see an unexpected weakening in the labor market, then that might also be a reason for reaction by us.
Whoa, that seems like really simple. And for me, anyway, that sounds like a victory lap because Jerome Powell was also really talking about history is going to really serve us well. Here's the thing I noticed him saying. He said 3 months. And remember, what are 3 months? Well, that's a trend. We look at that on the chart. So if we see lower highs and lower lows with an S, that means there's a pattern forming here. And that's really important for the Fed. So if we look forward to next week, this is going to be particularly important because we get the core PCE number next Friday, and then the Fed meets the following Wednesday. So what does all this mean? It really means that if we're going to be going lower, it means that it really all comes down to July 17th. But remember, it's likely going to be a buy the dip. Why? Well, because we have an 80+% chance of being higher. And if you remember, we did the math. It means we're basically going to go to 600. Whoa, 600? Yeah. And I know that might be hard to believe, but let's go through a couple of quick charts here because there's a lot of stocks closing at new records. What do we have? S&P closing at a new all-time high. And what's interesting here is that we're actually now, let's go here to the weekly chart, because we're actually back above our Fibonacci extension. And I said that this is an area where I would expect to find sellers. What did we find? Well, we found sellers. Why? Look at where we closed last week. We poked over this area and then we sold off. You can see it right here. Poke over the blue line and then we sold off for the rest of the week into Friday. What do we have this week? Well, we came back down to test the close and now we're back above that candle high. What do we have? Hollow candles, mostly over candle highs. That's bullish. If we shift gears here to the Dow, whoa, what's going on here? High, higher, highest. Whoa, look at the volume too. Yes, that's called rotation. If we look over to RSP or equal weight S&P 500, what do we have? Another record high and a pretty big move, 1.7%. Now let's look at RSPT or equal weight technology. What do we have? That's right, just do it, baby. More records, and it's pretty impressive. More records over here from Apple, again, on a closing basis. So if we go to a line chart, what do we note? It's a higher high because we're green. So not a new record intraday high, but a record closing basis. XLV, new all-time highs. You can see it right here. So healthcare, it's booming, baby. It's booming. What about financials? Why? Well, we had a lot of banks report, and they're pretty much done. Banks reported on Friday, they reported on Monday, and they reported this morning. Where are we? Man, we're at all-time highs. Yes, we're at all-time highs. Look at the volume too. Whoa. New York Stock Exchange. Well, this is 2,000 stocks. What do we have? Look at that. New all-time highs, plus 1%. What's most notable to me, though, is the Russell. Why? Man, this volume's strong and it's continuous. It does not want to stop. So what does all this mean? It means that, in my opinion, if we were going to see a massive sell-off starting on July 17th, let me just go back to here. I think we would have seen something like this. We would have seen, like on the day that we had NVIDIA sell off along with mega caps, which was ironically on Thursday, we would have seen more follow through selling, which means raising more money. I think they would have raised more money to put it into money market funds, right? It's actually even higher than this. I don't have the stat in front of me, but now it's above 6. I think it's at 6.15 trillion. So what does this mean? It means people sold things like NVIDIA, things like XLG, which are the biggest stocks in the S&P 500 or the top 50, and they bought other stuff. They bought things like the Russell. Oh, they bought Dow Jones. They bought healthcare. They bought a lot of things. So in my opinion, I think a lot of it comes down to whether or not stocks continue to deliver for earnings. We already know we're looking for beats for basically every tech company that has so far got a whisper number. So again, one more time, why is this a bear trap? Because people seemed awfully confused on the weekend. I'll remind you here one more time. Let's go to a weekly chart, and I'll show you two, because depending on what you look at, you might be getting trapped on a bear side or on a bull side. Last week for the S&P, we closed with another hollow candle over the previous candle high. Now, if we go to QQQ, what do we note? Well, this is a failed breakout. So depending on what chart you're looking at, yes, tech stocks have gone down. It was a bit of a move lower, but it doesn't mean the S&P can't go up. Now we have a double inside bar and we're basically flat on the week. So make it even simpler for me. Okay, here we go. If on Friday we close with another hollow candle and we're above where we are right now, it means that we're yet again, one more time over the previous candle high, which means people are rotating. So we're really looking for a move back above basically 564. It's 563.68 to be precise. And when in doubt, zoom out. And what do we see when we zoom out? Well, we're well over resistance. We're here at 564. We're well above 551. In order for there to be a reversal, listen to what Jerome Powell had to say. What do we need to see? Multiple months and multiple candles that are going lower. So we're not going to break the monthly chart until we break the weekly chart. I just showed you the levels that matter. It's 564. And before that happens, we have to break the daily chart. And right now, there is no evidence that the daily chart is bearish. Why? We're bullish, and as long as we keep pointing up, right? The uptrend breaks. And to be bearish, we need at least 2 lower highs and 2 lower lows. So I know that seems incredibly simple, but I would really encourage you to KISS or keep it simple, stupid. All right. With that said, I look forward to seeing you tomorrow. If you want to come hang out with me at 9:30, I look forward to seeing you. Thanks so much.